Hey guys, it's Kenton Becker with Land Home Financial, and I'm here again with another weekly video tip for you. Now, this week's tip is continuing our part 1 tip on speed Q&As, and this is part 2. So we're going to get right into it. First question of the day is, do I need good credit to get financing? Well, you need to have decent credit, but you can go down to a credit score as low as 580 and still have some credit options. Now, if your credit's lower than that, give me a call. We can take a look at your credit report and see if there's some quick things that you can do to maybe increase that credit score. Next question is, do I need a down payment? Not necessarily. We've talked on these weekly tips about down payment assistance and other programs that are available that can help cover that down payment. A down payment's not necessarily needed. There's also plenty of programs out there that are zero down. VA, USDA, those are a couple options of just 100% financing. So not always. You don't necessarily need a down payment, although having a down payment is definitely beneficial. It gives you sometimes better interest rates. It also lowers your monthly payment because you're borrowing less. So that doesn't mean that you shouldn't do a down payment, but you don't necessarily need one if you still want to buy a house. Fixed rate or adjustable rate? In my opinion, a fixed rate beats out every single time. I personally don't like adjustable rate mortgages. I've been doing this long enough as a loan officer that I've seen kind of some of the bad sides of adjustable rate mortgages. I prefer personally a fixed interest rate, and if it's over 30 years, it's a very affordable monthly payment, and that interest rate is fixed for the entire term, which is great. What are discount points, and what does buying down the interest rate actually mean? Well, essentially, when you are going through the loan process, you have the choice with your interest rate if you would like to pay a little extra money on your closing costs to buy that interest rate down. There's a point where this makes sense, and then sometimes where you can take it too far. If you want to buy your interest rate down a full 1%, that's going to cost you a lot of money. I mean, we're talking probably tens of thousands of dollars. Buying your interest rate down 1/8% or 1/4% might be beneficial, might save you, $50, $60, $75 a month and not cost you too much in the process. But buying it down more than that may not be beneficial. So it's just something that you have to talk with your loan officer about, and they can kind of show you the numbers and show you the details to make sure that it makes sense for you. At what point do I lock in the interest rate? Well, you're going to lock it at any point while you're in that loan process. So at the point your offer is accepted all the way through to closing. Now, any time in that first 2 to 3 weeks is the time period where you would lock in your interest rate. And it's going to be dependent upon the market. If the market is doing really good and daily it's just getting better and better, then you might want to float that interest rate and not lock it right away. And your loan officer can kind of help you look at this and decide what the best option is. If the market's pretty volatile and adjusting daily, you may want to lock it in as early as possible. And typically you can lock it in for as little as 12 or 21 days. And then you can even go out as far as 30, 60, 90 days, 40 days, or 45 days, etc. So you can do a lot of different options there when it comes to locking in your interest rate, but it's definitely something you'll do in the early stages of your loan. What documentation is needed to close? Well, a lot of this is going to be dependent upon the underwriter. If the underwriter needs certain things for the bank to satisfy the guidelines and the program, then they're going to request extra stuff. But at least to get started, we're going to need the basic financial items. So tax returns, W-2s, pay stubs, bank statements, maybe a copy of your driver's license, and filling out an application. That will get the process started. You'll be underway with a pre-approval, and then from there it's going to be case by case depending on your situation. Maybe if enough time goes on, maybe you need an extra bank statement or an extra pay stub. So sometimes those things are requested as you move forward with your closing. Okay, so that takes care of part 2 of my speed Q&A. Hopefully, again, you got some questions answered. Hey, if you have a question of your own, make sure to comment below or let me know. Give me a call, and I might even talk about it on one of these weekly video tips. So thanks so much for joining me this week. Have a great week.